We hear a lot about climate change, and we hear a lot of reports about El Niños and about various storms. Is the situation getting worse? Is the need to insure and the expense of insuring going up?
Well, certainly the expense is going up following losses. And if you go to 2017, that was the largest level of losses from hurricanes in insurance history. It was about $200 billion of economic loss, and about $100 billion of that was insured from, hurricanes Harvey, Irma, and Maria. So I'm wishing the best for Puerto Rico and the DR because they've been hit really hard in the last couple of years. But there are implications of climate change, particularly on areas like hurricanes and wildfires. And so on hurricanes, essentially, when you have warmer sea temperatures, you have more powerful hurricanes. And then if you have higher temperatures in the atmosphere, you have more water vapor. So then you have more extreme rainfall events. And so extreme rainfall is basically when it's in the 99th percentile. And then, of course, you have rising sea levels, and so you have increased storm surge. So it's really a triple whammy of potential damage.
So how do you see that in your business, your customers? Yeah. Do they want more coverage, more extensive coverage? How is it changing their demands that they give you?
Okay, so there's a couple of different things. I think for most corporate customers, they evaluate what they need, and it doesn't change year by year. I think the issue is really with regard to homeowners and small businesses, particularly in the United States. Flood is the largest natural catastrophe in America. It is rising as a risk, not just because of changes in climate, but other factors as well. I mean, we believe that there's been about a tripling of the amount of large flood activity in the U.S. since the 1980s. There's about 15 disasters per year, about $15 billion. And the issue with regard to flood is that most homeowners are not insured.
So, I mean, before we move on to sort of other risks that businesses and homeowners might be dealing with, I mean, who pays for all of this at the end of the day? And I focus more on like what happened in PG&E over in California with the wildfires. I mean, who's going to really bear that cost? It feels like sometimes we wind up circling back with the taxpayer if there has to be a bailout, if people aren't insured. How do you see it?
Well, I think there's difference. When you talk about wildfires, that's typically insured within a homeowner's policy. So the damage that you saw in California was largely insured. Now the pricing may go up post losses, but it's insured. Flood is a different matter. Flood is, let's take Hurricane Harvey. Only 20% of the people who were impacted by Hurricane Harvey were insured. And there's a few reasons for that. I think that it's basically a lack of knowledge. There's a number of homeowners who would think that their standard policy covers flood when it does not. Or they think the government may bail them out post a catastrophe. And some people, it's an affordability issue, and they basically have the view that floods are really unlikely, so let's roll the dice. When you look at something like Harvey, the average FEMA grant post that loss was less than $10,000. For those who are lucky 20% who made the good decision of being insured, the average insurance claim payout was above $100,000, so a 10 times difference.
So Dan, go beyond natural disasters now as you look at the needs of your customers for insurance. What are the top ones that they need? Is it cyber? Is it?
Yeah, so Marsh McLennan is the leading professional services firm in the world in the areas of risk, strategy, and people. So we're the #1 insurance broker, the #1 HR consultant in the world, the #1 outsourced CIO in the world. And we're an advisor to 95% of the Fortune 1000. So we have a pretty good vantage point in the conversations we have with clients. And I would say clients these days, it's basically geoeconomic concerns and cyber probably top the list. So let's talk about cyber for a second, because for most boards, cyber is viewed as the #1 risk facing their organization. And so we get very involved with companies trying to do the right thing, protecting the perimeter, multi-factor authentication, encryption, knowing your crown jewels, testing, retesting, preparing for a breach, that sort of thing. But I have to tell you that cybersecurity in general is very frustrating for CEOs. In private conversations, essentially CEOs like to get things done. There is no done here. This is a race without a finish line. There will never be a time where a company will say we're fully protected. The other issue is that's frustrating for CEOs. There's a bit of a blame the victim mentality sometimes, and so that can be frustrating too.
Geoeconomics, you said, was the third area.
Yes.
That's something we talk about here a lot. How
Sure.
do you insure for geoeconomics?
Well, you really don't, but you insure the trends. I mean, ultimately, it is a risk factor, and it's really not about insurance for most of our clients. It's about risk, and so we talk to them about risk and what they're saying now. I mean, clearly, there's less optimism than there was in 2018, and concerns around either China and U.S. as rivals, general economic slowdowns around the world, Brexit are all areas that have some element of concern. But what we're actually seeing on the ground, we're still seeing growth in most regions in exposure units being property values, payrolls, shipments, in our view, are still going up mildly.